Welcome back. You're watching Stockwatch with me, Julieta Televi, and joining me to take your stock-related questions this evening are David Shapiro from Sasfin Securities and Wayne McCurrie from F&B Wealth and Investments. If you'd like to send questions, please email stockwatch@bdtv.co.za or message us on 41392 or tweet us or X us at Business Day TV using the hashtag Stockwatch. David, not a particularly good finish for the JSE today. The rand was a bit stronger, but there were some quite nice gains among shares like AB InBev. Pick and Pay even had not a bad day. And MultiChoice. What's going on with AB InBev in particular?
I've got to tell you, Mr. Trump came out with a statement saying that, Bud Light really messed up. Epic mess up. But it's not a woke company, and a company deserves a second chance. So, Mr. Trump has come out there endorsing Bud Light, a great American band. So, I mean, that's the only story I could pick up on that. They're up about 4%. So it's what is he? He's not on Twitter. He's on Truth something or other.
Truth
I don't
Social.
know what it is. Or whatever. Yeah. So he came out endorsing Bud Light, which is AB InBev. So I mean, when maybe the next president of the United States, goes out and starts wearing a Bud Light cap, maybe there's something in it. So.
All we need now is for Taylor Swift to say it's her favorite beverage, and then it's off to the races.
It's over, yeah. That's a market. But I think there are some gains. Remember, you've also got Chinese buying of their stocks. So it's translating into nice some process and that. They're putting a lot of money into trying to stabilize the market. I mean, if you go to the Hang Seng, as they call it, I call it Hang Seng, but it's Hong Seng, and you go into the CSI, all those indices, they're at multi-year lows. So there's a lot of effort now to try and stabilize the Chinese economy. So it is translating into gains, especially Naspers process and that. So, but the miners are soggy. The miners, yeah. There's no, platinum shares remain under pressure. The platinum price has fallen below 900. Palladium's not going anywhere. So we see continual pressure on that, despite the mining conference. Anglos was under pressure today, but Glencore under pressure, yeah. So that's holding us down a lot.
David, while we wait for Wayne, we're not quite sure where Wayne is. So I'm going to start asking him questions.
Across the road at the Wanderers.
Okay. No, please don't get too distracted. Stay with us. And actually, a viewer sent us a question, talking about foreign markets, and he said,
there you are.
It seems that most of the Stockwatch guests think that one should invest 70% plus into foreign markets, but that the timing isn't right now. I'm only about 30% invested in foreign markets and can't wait for this elusive right time. Is a good strategy to invest, say, 2% each month in foreign markets until I reach 70%? Which would take, I suppose, a while if you're at 30% now.
That will take a lot of months.
David, sticking with you before we go to Wayne. Hello, Wayne.
Yeah. I've always bought shares, not geographic areas. That's been my whole strategy. So I look at the companies. I don't care where they are. You do your research because most of the companies are multinational in any case and operate in so many different jurisdictions. So I've never been influenced by that. I just look at the quality of the company and pursue it from that point of view. So, from that point of view at the moment, I think I'm 100% offshore. Although I do recognize that in the smaller caps, there are opportunities here. I have to say that. But I mean, I don't, so from my point of view, I don't play the rand, or I don't try and play the rand. I look at the businesses, and you've seen the results coming out of some of these companies. They're really superb.
Yeah. Wayne, what do you think? Because I know you have a slightly different take to this, to David on this.
Look, my apologies. I had to do a Zoom upgrade.
Oh dear.
A Zoom update. I couldn't join the meeting unless my Zoom was updated. But anyway, that's beside the point. Look, there's no magic number, by the way. There's no 70%, 60%, 80%. I would say over time, you must have at bare minimum 50% of your exposure. But it's also very dependent on the person. What are your liabilities? Where are you going to live? Where are you going to incur your expenses? So there's a different number, I suppose, for each set of circumstances. But certainly for average Joe, I would say at least 50% offshore. And then, of course, it comes to timing. I mean, now is not the time to go to 50%, but that's just my opinion. I could be very well wrong, but let's just say I'm right and you at 30%. I would think in the next 2 to 3 years, you're going to get the opportunity to go to 60 or 70 or 80% that you want to go to, whatever your target is. Just that right now, it's very reminiscent of 2000 and many other occasions where the rand is totally and utterly bombed out and people panic and go overseas and they regret that decision for the next 5 years. You've got to understand it is a cycle. But yeah, I mean, obviously there's way more opportunities offshore than what you can get in South Africa.
Yeah. Which I think is of no small distress to a lot of people. I mean, I see people on Twitter saying the JSE is withering away daily. It certainly feels like this.
That's globalization. We're a small economy, we're a small country. And as we well know, we've got many, many negatives facing us. It's not a failed state, but there are many negatives facing us. And to be honest, the government has done a terrible job in governing the country and providing services and, just doing what governments are supposed to do. I'm not saying it's the worst in the world. There are many, many others that are, far worse than South Africa. But in a global environment, there will, of course, be bigger opportunities in bigger economies and better run economies and more efficient economies. That's quite normal. And I think a lot of people that bemoan the demise of the JSE, or I know David's not one of them, but are chaps who grew up in the stock market in the 80s and 90s and 70s, where you couldn't take money overseas.
Yes.
And all you had to invest was in South Africa.
Yeah.
Julia, the JSE, we forget, is 70% offshore already. The companies are doing 70% of their business. I'm taking a rough guess. I even looked at Vukile. Their numbers came out that's 60% Spain, 40% local. So, I mean, we wouldn't think that way. They've got some offshore investments. Yes. But, I mean, they're a Spanish property company now. So, when you make those kind of decisions, when you talk about offshore, understand that by staying in the JSE, so many of our businesses are operating in other geographic areas.
Yeah. I mean, here's a question from another viewer who has built himself, I assume, well, judging from the questions that he sent us over the last couple of years, over a timeline of about 2.5 years, my South African Shoprite stock has gained 43% compared to two of my US stocks, Cameco at 112% and Microsoft at 95%. Where do I find value and gains in SA Inc. stocks? I guess maybe the subtext of that question is that would give me similar gains to what I'm seeing in US stocks.
Well, look, I mean, David mentioned that, a huge majority of our shares are international shares, but unfortunately, the majority of those are mining shares. And the mining cycle is negative, as I've spoken about so many times now, that you can get a return like that on mining shares if you happen to buy them at the bottom of the cycle and sell them at the top of the cycle if you're that fortunate. But, a mining company, let's talk the absolute worst or best example, not worst example, the best example of this is Anglo American in 2015. It got down to 52 Rand. The next stop was 800.
Yeah.
Kumba did the same thing. It got down to 26 Rand. The next stop was 600. So, you can make these, but you've got to, obviously, there's a great deal of luck in calling the commodity cycle correct. I mean, I'm having a look at Anglo American here. I mean, Anglo American, when, in 2020, before COVID, was $400. The next stop was, once again, 800 Rand. So this can double in 2-3 years. And the next time is going to halve in 2 or 3 years, which is exactly what it's done now. It's now $400 down from 800.
Yeah. David, do you want to add anything there, or shall I move on?
You can move on. It's the worry, the one concern that I have about the South African economy, and these are not my forecasts. These are the Reserve Bank forecasts and IMF forecasts. When you look at what they're saying about our economy, that to me is the biggest concern, is that we're growing at a pedestrian rate, at 1%. Where you need to really crack this economy and break unemployment or do something, you need 4-5%. Yes, it can come. Wayne says if we get a commodity boom and things start to pick up again, but at the moment we're just bumbling along, and it's very difficult for even ShopRite to function under those kind of circumstances. Juliet, if you look at the results, it's the food, it's the grocers that are doing okay, and even then they're stealing other people's market share and some of the apparel. But I mean, other than that, it's the company. Motor sales are down. All durables are down. Furniture's down. So on. So it's difficult economy, and it's a very difficult area to function in.
Yeah. Okay, well, moving on to a question on big tech. The viewer says, I recently subscribed to YouTube Premium after seeing Elon Musk's deepfake ad for the 100th time, and he says, I'm pretty sure I'm not the only one. The new subscription income for Alphabet Google should hold them in good stead. Would regulators step in at any point? And also, he says it's ironic that the Tesla/ex-CEO is securing income for Alphabet. Wayne, how worried are you about regulators stepping in to quash the power of big tech?
It's been around for a very long time. We've had this coming up quite often where they come in, and it's not going to stop. Regulators, governments are actually, quite frankly, terrified of not big tech per se. I mean, maybe they're also very scared of AI and what AI can do, but they're terrified of social media because that can swing people's opinions very, very easily. And it can also be fake news. I mean, but they're terrified that there's this beast that they cannot control. So there will be continuing interference by governments, but I think to a relatively limited extent. Because social media is so popular, if governments attack social media too much, they'll become unpopular.
Mm-hmm. I think they'll hold back on any acquisitions. They won't approve them. But I mean, a lot of these companies are developing organically or starting new businesses, which you can't stop them doing, using the cash that they're generating. But I think if any one of these businesses start to do big acquisitions, they'll clamp down on it. But Wayne's right. I mean, the regulators have been at them for decades.
I mean, the only thing that I could see, which has already happened a bit in a couple of jurisdictions, if you think about Australia, for example, is that governments around the world force them to invest in traditional media, in journalism. And of course, take it from whence it comes. I think that would be a fantastic idea, but it would probably only ever be a sliver of income or a small percentage of what they make.
You can't, that's progress. You can't force them to go into areas like that. As much as we like it to happen, I think that's all changed. I was reading The Guardian today on music. All those famous music magazines are gone. And people, and you can't stop that. I didn't really used to read them, but you'd always look there for new artists and new songs and everything. It's gone. Most of those are closed down. I think The Guardian still keeps its music column going, but that's how things happen, Yeah. So you're going to be stuck with Taylor Swift and all of those, the overdose of those forever. No, you're never going to find any new artists, So anyway, just get used to it.
Yeah, just get used to it.
Yeah, if you take the Magnificent Seven, and let's just use the NASDAQ as an example, that you've had a tremendous return over the last year, but you're flat on a 2-year basis, eh? Microsoft outperformed, but Netflix hasn't, Alphabet hasn't, Tesla's been pounded. So on a 2-year basis, you haven't made money on tech, and our market, admittedly, in Rand terms, is also flat on a 2-year basis. So, pick your period to make comparatives, eh?
Yeah, that actually has it can influence your decision making in a huge way if you consider something over a 1-year period versus, say, a 3 or 5 year period. Okay, moving back to questions. A viewer says Bidvest has hit a little bump of late, not catastrophic, but certainly against their consistent growth path. Was there something specific I missed, or is it more macro related, and would now be a good time to buy more based on their past performance and recent drop? David.
I'm also a bit surprised at Bidvest because I'm not sure what took it down at the beginning of the year. When was it? I think it was in November or December that they came down sharply. I don't think there was anything there in their trading update that really shocked us. I know they had issues down as all our companies did with with Transnet and with the harbors and so on. But I would have thought that it would have recovered. I still think it's an incredibly well-run business. And I don't know whether it's just reflecting perhaps concerns about where the economy is going. But I can't fault it in terms of its underlying businesses. There's nothing there that worries me. Yes, motor sales are down, but I don't think there's anything out of the ordinary in Bidvest. But the view is right. It has come under pressure and it's looking a little vulnerable where it is at the moment. But I don't know of anything that should have got it like this. That should have knocked it as hard as it has.
Wayne, would its present vulnerability entice you to buy it?
I think so. I mean, maybe the share price just went up too much, because it's obviously had a very, very strong run. Up until we've had this weakness, it's actually been a very good performing company. And I agree with David. Maybe it can fall a little bit further, but you're buying it at, an 11-12 price earnings ratio, which seems quite reasonable for the quality of the company.
Okay.
Yeah. I don't know whether it's related to the exports, and they're having problems that's coming through, getting the boats on the water or getting the ships filled and so on. But in every other respect, they were doing well. They were well placed for solar, all of those, the engineering businesses and so on. So anyway,
yeah,
I just look deeper into this one.
Okay,
it's not a bad business.
Okay. Then transaction capital, the viewer says, I suppose the average entry price for transaction capital was R9.54 and the current share price at R8.07. Must I sell now, or is it the best to wait for the unbundling of We Buy Cars?
Oh, yeah.
And he also says, Stockwatch, an excellent show in respect of shares. I've been watching it since 2010. So thank you, David and Wayne, because I think we have all been here since 2010. So transaction capital, Wayne, if you have lost faith in the company, would you wait for it to unbundle We Buy Cars if you do want to get out, or would you just sell out now?
Man, I would actually wait. I mean, the company, the share price has doubled since October. So since that second trading update they did in October, I would wait for We Buy Cars. You're talking about David and I have been here since 2010. I think David's been here since 1910.
Yeah, I am.
So rude.
February was my 52nd year on the stock market. 1st of February, yeah. Been here a long time. Lots of stories to tell.
Yes, someone buy the man a drink and he'll reveal all. Okay, so
buy him a Johnny Blue.
A Johnny Blue, yeah. So Wayne,
Yeah,
so you'd hang in
Johnny
there.
Blonde. There's a Johnny Blonde. Do you know that?
I didn't know that.
No, I've got to go try that one. Yeah.
You've got to give it a bash.
Sounds naughty. David, would you wait for the unbundling of We Buy Cars, or?
There's a presentation I see on the 16th. Is that right? I think that PSG are giving, to talk about the listing. But let's hear what they have to say, about the valuations that they're likely to have. But you don't have to sell it now. No, I'm absolutely agree. Ahead of an unbundling like that, just wait. Wait to see what they've done.
Okay.
And then you'll look at the rest of the business. You'll have to unpack what's remaining, and there might be some elements. You've got fresh management in with a fresh approach. So let's see.
Okay. Talking about sort of special situations on the JSE and corporate action, there's a question on Mondi. And the viewer says, could you ask the panel to comment on Mondi's special dividend and share consolidation? Share consolidations are often done alongside payments of special dividends to protect the share price. In other words, the share price remains at approximately the same level following the payment of a special dividend. However, the Mondi share price has declined since the share consolidation, so investors have fewer shares and a lower share price. At current levels, the special dividend will only compensate for about 50% of losses. What other options, other than the payment of a special dividend, were open to Mondi with the sale of its Russian business, which was, of course, the source of the cash? Wayne.
Yeah, look, I mean, the other option is they go back and you don't want to sit with a lazy balance sheet. You don't want too much cash on your balance sheet. It's incredibly inhibitive of earnings going forward. So you want to get rid of that cash. So the one is you give it to the shareholders as they're doing. The other one is you buy back your shares. I way prefer getting a dividend than share buybacks. So those are the two options really or they can go and make a huge acquisition. But sometimes when you've got too much money and you're pressurized to make a big acquisition, you make the wrong acquisition and you buy the wrong company or you overpay. So I way prefer the company pays you a dividend if they come across cash like this from selling a business.
Think Bright and New Look. I mean, that's a classic example of an absolute. You might have stood in the shower and ripped up a whole bunch of
but lots of
200 rand
lots
notes.
of companies have, cash has burnt a hole in their pocket. Think of all the mining companies in 2008. I mean, cash burnt a hole in their pockets.
But this was peculiar.
Now.
Yeah, but Wayne, this was peculiar because what they did
is
they didn't want the share price to fall after the payment of this dividend, which was quite a hefty dividend. So they gave you did a 10 for 11 capitalization issue or swap. So
consolidation.
You got consolidation. So you got 10 for every 11, hoping to stabilize the price. I said, oh no, this is just too complicated for me.
You mustn't make things too complicated.
Yeah,
I mean, if you paid out a special dividend and your share price falls, that's fine.
Yeah,
People will know that you paid out a dividend. So it's to try and keep a static share price by share consolidation and all of that, I think you're just playing.
So basically, I mean, if the viewer might be asking, should they not have just paid the special dividend and then with a portion of the money maybe bought back their shares, or just pay the special dividend and hey ho?
The special dividend and your share price falls, and when people in 30 years' time look at the share price falling and wonder what it is, then they must go do their homework and find out.
Yeah.
Okay.
Anyway,
okay, don't get too complicated. That is the ultimate message.
They must never make anything. I mean, that whole Richmond story, that was just so complicated, no one could understand it.
And then you've got to divide by 11. Nothing divides by 11.
Clearly, a team of investment bankers got to them.
You must remember, most people in investments like David and I mean, we're not rocket scientists.
Yeah, no.
Okay, very quickly, please could you ask the panel their views on AVI, Woolworths, Pepco, and Vukile? Before I get to your stock picks. David,
all
you're
good.
Nodding. All good.
All positive. So then again, I like AVI, superb. What was the other one? I like Vukile, very, very good results, solid. Price is a little pricey at the moment. What was in the middle?
Woolworths and Pepco.
Yeah, I love Pepco. I think it's such a great company. Those black school shoes and those little grey pants and white shirts, they're doing brilliantly in that area. So, and it's focused on the right side of the market, the low end of the market, and they got a good product range, a good exposure. And Woolies are coming right,
Wayne,
New
how about you?
Fresh management.
Yeah, slightly different view on two of them. Pepco, their trading update wasn't that great. Lots of guys beat them down. Lots of guys did much better than Pepco in the trading update. It wasn't bad, but a lot of guys did it significantly better. So that was the one negative there. Woolies, when they're battling with their non-food business, and on a comparative basis, I think AVI shows the best value of the whole lot there.
Okay. And Wayne, sticking with you, what's your stock pick this evening?
Look, I'm going for Vodacom. I mean, it's a simple valuation story. I know that their latest results were a bit distorted by buying Egypt, but if you take Egypt out, the results were mediocre, okay. I mean, nothing great. We all know they've got this please call me thing going on now that's been going on forever as well.
20 billion rand is what people are saying that they owe this fella, which is double their annual capex. I mean, can't see that.
The point is,
happening.
This share is it's lower now than what it was at the worst of COVID. I mean, it's a 7 dividend yield, it's a 9 PE ratio, and this company generates cash. So I think it's just too cheap. I'm not crazy about the company, I think a lot of these companies have gone ex-growth, but that doesn't matter. It's still a relatively stable business, and the share is super cheap.
Okay. David, how about you?
There's a company that came out with their numbers last night, an AI company called Palantir, Palantir. I've been watching it for some time. It hasn't been making money, but it's been highly rated for the quality of service that it gives, to government, to small and medium enterprises, and so on. Particularly in terms of government intelligence and fraud detection and things like that. Their results are superb, and they are so busy they can't cope with the business. So you're looking for an outside AI play. Have a look at this one. I haven't done full research on it, so it's coming with a health warning. But I like what I saw and I like what I read.
Yeah. Well, I mean, that chart looks astounding. So, yes, we have to leave it there, unfortunately. David, Wayne, thanks for joining us. David Shapiro is from Sasfin Securities. Wayne McCurrie is from F&B Wealth and Investments. And up next, The Close. Stay with us.